Hey, what's up, guys? Miles here. Did you know the best time to build wealth is during a market crash? While you enjoy watching this video, be sure to hit the subscribe and like buttons under this video. I believe most important during a market crash is to diversify your portfolio because when the market is crashing, it becomes more volatile and difficult to predict the market price. Diversification gives you more opportunities to recognize your portfolio whether an asset is going well or bad. Like if you were to put all eggs into a basket and the market crashed, you lost all of it, right? The same concept with the stock market. You don't want to put all your money into a basket. It's important that you keep your portfolio diversified. While you diversify your portfolio, it's important for all of you to take advantage by buying more when a market drops or dips. Never panic sell. Doing that causes a market fluctuation. Because if you panic sell, the market will fluctuate because others will buy while you sell. Don't sell, let other investors panic sell so you can take advantage of it. The other investors panic, and you want to become greedy. Being greedy, you have the huge advantage. Keep in mind, you want to diversify your portfolio and buy a dip. Now the second, you can short the stock market. How does it work? Let me give you an example on this one. A stock is currently at $100 a share, and you predict that the stock will drop to $90 a share by next week. You go ahead buying the short position. Later next week, the stock price strikes $90 and you will collect the premium or money from it. You can take the advantage of that. And while you diversify your portfolio, if you bet that your stock prices will dip, you can go ahead buying the dips as you are shorting your stocks. It's possible to double or triple your profits using this strategy. The third part, you can leverage the market. You borrow money like margin call, but be honest with you, during a market crash, interest rate tends to raise, which is obvious. So, I sometimes think that leveraging an asset isn't probably the good idea during a crash because of having to pay high interest rate. But still, leverage can be the good thing because if you leverage an asset while the price dips and it goes up later, you can make a lot of money from it, probably 3 or 4 times profit. Again, borrowing money can be the good thing, but the downside is high interest rate. If you are willing to take risk, it's up to you. Remember, more risk means more reward. Moving on from the market topic, now I want to talk about treasury bonds. It is when you deposit your money in any selected brokerage that offer treasury bonds. Your deposited money into the treasury bonds would help the government while America is into a massive bad debt. While your money is being deposited in, you'll be given a fixed interest ahead of time from the government that has to pay back to you. The interest rate tends to be reasonable and good. A nice thing about treasury bonds is for the investors who want to play safe during a crash. When the investors know that a crash is coming, they most likely sell and put it into treasury bonds. The investors do not put it into just the treasury bonds. There are different types of bonds you can purchase, like municipal, corporate, and other more bonds during the time of crash to play along safe. The only downside for treasury bonds is if you put your money there, and later you want to take it. It'll be a smaller amount, not full. If you want the full amount, you have to leave and wait for it to be mature since it's a fixed interest. Some wait 5 years, 10 years, or 30 years. They vary, so you have to wait until it's mature to get the full amount including interest. As I explained you about diversifying your portfolio, Also, I think another part you need to know is focusing on company that you know will do well in the long term. Good business model will perform well. Like S&P 500, an index fund comes with 500 large public companies in the US. You can notice that S&P 500 always performed well since 1980. The S&P 500 stock price usually would dip a bit and then go up again, like in 2001 and 2008. That's why it's important that you buy a company you know will do well in the long term. Don't buy penny or hype stocks. The last one for this video, I highly recommend you to buy illiquid assets. I personally believe that illiquid assets are the best to buy during a market crash. Because when a market crashes, the market becomes extremely volatile and difficult to correct the market prices, like I explained earlier in this video. While liquid assets are more stable because they are harder to sell and get cash. The illiquid assets can be such as real estate investment trust, gold. Like these assets are hard to sell, they tend to control the market and less volatile. Illiquid assets are less risky and possibly more profitable. As you buy liquid assets, you also want to keep liquid assets, like cash, up to 25%. All of 75% for illiquid assets to keep both balanced. If you invest all to illiquid assets, you will have hard time to buy something because as all of your assets would be illiquid. During a financial crisis or market crash, you get to make sure that you have income to keep coming in consistently. Do not ever lose any income. Because when a market crashes, which means you will lose a lot of market values as they are going down. Therefore, you cannot afford to lose income too. So again, make sure you have income consistently coming in. That's why I told you real estate is amazing. Yes, it's an illiquid asset. You may lose some value in real estate, but you can continually earn income from real estate through rental property. You can also invest into rate. They have dividends you can earn too. You think about it. If you ever buy a house or property during the crash, it can be good, but you probably don't want it because of high interest rate. Remember, don't worry about the high interest rate. Even with the high interest rate, you can still buy a house. You want to take advantage of that low-valued house. And remember, you can always refinance the house to reduce the interest rate later. When a house value goes down, take that opportunity. In this video, I explained all the tips you need to know for the upcoming market crash. These tips are very great to build your wealth, especially during the crash. I'm going to take these opportunities as I know the huge crash is coming soon because of the upcoming interest rate hike. Possibly 7 or 8% interest rate hike in March. That's really a lot. That's the huge raise. So that means I know that the market crash is happening soon. I'm taking the opportunity. Based on the long history from the past market crashes, people become wealthy from a market crash. It is the best time to start building wealth. Take the opportunity. Don't think about waiting later. I hope my explanation gives important points to help you understand more what is happening in the market and how you can become wealthy from the market crash. Take the advantage. Okay, before you all go and watch another video, be sure to smash the like button for this video and subscribe to my channel. I love to give away my amazing contents that value your financial journey. Remember that. Smashing the like button helps the YouTube algorithm to recognize, and they can know that this content is really good. See you all next time soon.